So I was watching a video the other day called What is a Stock, or How to Buy a Stock, and I've been doing this for a long time, about 10 plus years now, and primarily in this digital world where stocks and tech meet. And I thought, you know what, I'm going to try to make a video. I'm going to try to tell people the basics of trading and investing and what it means to buy a stock. I have no clue if you'll like this or not, but let's just jump right in. You can leave your comments and feedback as the video goes. I'm going to try this out. So what you're looking at right now actually is a chart of Tesla. And I'm just going to say that one of the basics of trading and investing at this moment is understanding what the price means and what the ticker symbol means. So Tesla, for example, we all know what Tesla is. It's a car company, has a ticker called TSLA. That represents one share of Tesla. And so you can see the price of Tesla by just searching on any website or app, TSLA. Sometimes you can just type in Tesla, and there it is. You see, match up the ticker with the company name, and then you can see the price. So what does the price mean? The price means how much is one single share of Tesla trading for at this very moment. And if you look closely, it happens to say $703, and you can see here 703. So one share of Tesla at this very moment is trading for $703. Oh, look, it's dropped to 702. It's real time. There are thousands, if not millions of people around the globe trading this stuff in real time. There are bots, algorithms, funds, machines, people like me, people like you. Almost anyone you can think of at any given moment is pressing buy or pressing sell, and it's all happening just basically right in front of you. But also, that's really important. Markets are huge. So for example, at the bottom here, you're going to see these volume bars. Now, volume tells you how many shares traded over a given period of time. So just write that down really quick. This is volume. How many shares traded? The reason why I want to share this quick fact about volume is because it's going to open your eyes up into how big markets are, how competitive they are. And that's really a key component to getting started in markets, is just sort of being aware, hey, look, markets have a lot of people. It is not easy to just win in markets. They are challenging. So for example, on this day, February 25th, 2021, you can look up here, by the way, at the top left to see how many shares have traded. Volume, vol, short for volume. On this day, on February 25th, 2021, 39 million shares were traded, and 39 million shares were traded at about $700 a share. Do the math on that. This is big money. There is a lot of people trading these shares on a daily basis. Now, quickly, this video is just for education and entertainment. I am by no means saying whether you should buy or sell Tesla. I'm just using it as an example because it's so popular. A lot of people know what it is, so it just will resonate a little more. So here's the key. We know now what the ticker symbol is. TSLA, Tesla. And by the way, one quick tip, really helpful. Always confirm the company name with the ticker. For example, if I type in Ford, look at this, Ford, Forward Industries. Whoa. That's not the Ford we're looking for. The Ford we're looking for is Ford Motor Co. Look at the ticker here on the left, F. So always double check your tickers. Do not buy the wrong ticker. Always make sure you confirm the ticker with the symbol name. Just show you that one more time. Ford is F. If you type in Ford, you may see other companies out there with similar tickers. Make sure you confirm them. So now we have Ford up on the chart, and we see Ford trades for $13 a share. So one share is trading for $13, and it's happening in real time right now, and you can watch it yourself. In fact, just to really make this come alive, this is a 1 second chart of Ford. So you're now watching second by second trades. You don't know who's out there trading this, or why, or what they know, or what they don't know. And that's why markets are so competitive and so difficult. There are people trading second by second, literally. And even if you're a long-term investor, just being aware of this is going to help you think a little more deeply about what you're getting into. and what some of these crazy panic moves or crashes actually mean. There's a lot of people with different strategies, whether it's long term, by the second, by the minute, by the hour, by the week. It's all happening. And that's just so important. This second by second chart, I think, tells you a lot. One share of Ford is going for $13.15, $13.15, and it's just going back and forth. Well, it dropped to $13.14. You get the idea. Now, another really important thing about the components of markets and getting started, I'm speaking solely as if I were a rookie investor or trader, is it's very likely you've done something in your life that is a lot like trading or investing. For example, the market, we're just going to write this down, the market is made up of buyers and sellers. So what you just saw on the 1 second chart is buyers and sellers transacting by the second. The market is made up of buyers and sellers. Do not forget that. Next point, that's really important, is that everyone is looking to profit. Everyone has a different strategy or time frame, and everyone has a different view on what will happen next. So these are some really important points I want to add here, because when you see the chart trading second by second, when you see that Ford is trading at $13.16, these 4 points are all happening in real time on this chart and just in markets in general. Let's go through each of them. 1, the market is made up of buyers and sellers. What does that mean? Well, some people are buying, some people are selling. It's literally that simple. And we don't know why they're buying or selling. They might have different needs for their life. Maybe they need to raise cash now. Maybe they are a big fund and they need to move money to another asset class, so they need to slowly get out. There are different reasons, and it varies by everyone involved. You, for example, you may have a different reason for getting into markets than me. And because of that, we're going to buy and sell at different times because we have different reasons. The next really important point is everyone is looking to profit. Now that I think is super important because you're not the only one who's trying to beat the markets. There are tons of people out there trying to beat the markets. And when everyone is trying to beat the markets, it's going to get really competitive and difficult. That's why it's not easy. And there is no get-rich-quick scheme in markets. If you remember that everyone is looking to profit, if you remember that it is competitive and there are all these different funds and people and just different aspects of trading strategies, you may take a step back and go, okay, I need to slow down. This is competitive and I'm not the only one trying to win here. And when everyone's trying to win, sometimes no one wins or it's really hard to win. Next up is everyone has a different strategy or time frame. Now, what the heck does that mean? Well, like we said earlier, you might be investing for the next 10 years. I might be investing just for one day. And when that happens, we get these types of really fast prices. Some people are just buying second by second. Some people are buying minute by minute. And then, of course, there are maybe people who are trying to buy for the next 10 years. So that's a very important component. And then, of course, a fourth one is everyone has a different view on what will happen next. Well, what the heck does that mean? I personally, when I see this chart of Ford and what I know about Ford, I think Ford is a great company, and I could see it possibly, I could really see it possibly continuing to rise for a few more years. But you may be a believer in Tesla and technology and the new emergence of car makers like Tesla, and maybe you don't think Ford's going to last. And you see how we have those different views. I feel this way, you feel that way. That alone creates a market because you essentially are betting against it. So we could do sort of like this arrow here. You're betting against it. I'm betting for it. And it creates this compressed market where, people are taking different sides. They're taking different sides of whether to think it's going up or down. And when you have millions of people doing that, it just compresses price and it's going to keep it very, that's why the market is what it is and why you sometimes also don't see wild swings. It's because we all have these different views. We're making a market, and that's what you're seeing at any given point in time. Now, there was something I was going to touch up on, but I forgot to really dive into it, and that is, what are some other examples of buying and selling things that are like markets? We can quickly list them out. If you've ever traded baseball cards, if you've ever bought and sold a home, if you've ever sold anything on eBay or any other marketplace like Etsy, or let's just write Etsy, just marketplaces. If you're in fashion, and one more would essentially just be if you've ever bought a car. So all of these things have similarities to markets. Why do they have similarities to markets? Well, when you're trading baseball cards, you are trading one card for another, and it's because you think that the card you're trading for is worth more and the card you're selling is worth less. But the person you're trading to clearly thinks the opposite. So you don't know who's right or who's wrong. You're both working on different forms of information. So this is a very similar process. When you're buying a stock, someone is selling it to you. That someone clearly thinks it's not worth as much as you do. So always keep that in mind, and there is that similarity. What's another one? Well, if you've bought and sold a home, what happens? And this is similar to if you've ever bought a car as well. So actually, if you've bought a car, I'm just going to highlight it, or if you've bought and sold a home, what do? You do hours of research. You look into all of the comparable prices, features. Does the home have room for expansion? Could you one day sell it for more? Same thing with a car. Could you ever one day sell your car for will it ever maintain some price? Is it the best deal relative to other cars? So would you rather buy, say, could you just go buy a Toyota for this price, or Toyota versus Honda, for example? And the reason why that's similar is because every time you buy a stock like Tesla, well, you're buying Tesla and not Ford. And so the point is you're making this trade-off. And in the car industry, that happens a lot. You're buying one brand and you're not buying the other brands. Are you making the right decision? Depends on your research, your needs, your time frame, all of that stuff. And the reason why this is relatable to a home, like we were saying, is all of the research that you do when you buy and sell a home. And markets have a lot in common to that, in the sense that when you invest for the long run, let's just say you are buying Apple. You're buying Apple much like you might buy a home if you're investing for the long run. You're doing your research. You want to make sure you're buying at a fair price. You want to make sure you're buying something that actually could appreciate and get more valuable. And you're buying something that you think has a lot of potential. Same way at a home, you would do renovations or you would invest into that home. You would buy Apple because you know what? You think their team, their product, their mission, their fundamental financial situation has enough skill and flexibility that it could grow into the future, much like you'd like your home to grow. So I'm drawing out these similarities just to try to connect the dots with anyone who has ever done any of these, has ever done any of these. Baseball cards, sold a home, sold something on a marketplace. It's just like financial markets. You are buying and selling. There are buyers and sellers, and you are acting on different forms of research, and you all have different goals and time frames, and it just creates this mishmash. And ultimately, your goal is to figure out how can you profit and do something for the long run, or if you're trading for the short run. So let's now really dive into the mechanics or the fundamentals of all of this. I hope so far I'm doing a half decent job, and this next part of the video is going to try to explain the basics of what it means. What are shares? What are you actually buying when you buy or sell a stock? Like, what are the basics of it? Who owns these shares? What do they entitle you to, et cetera, et cetera. So we're sticking to the Tesla example, remember, just for education, entertainment. So you may know that one day, while Tesla does trade for $700 a share today, There was a point in time when Tesla traded, we'll actually go way back in time. There was a point in time, we're going back through all of Tesla's price history now. There was a point in time when Tesla, if you see this chart, traded for just $4 a share. So $4 a share. And someone saw the potential before anyone else, much like they were flipping a home or investing in a car or even buying that baseball card, and they saw the potential, they got involved, saw the vision, and now it trades for 700. But why did it trade in the first place? Like, what started it? Here's its first candle ever. This was the first day of its trading. That's an IPO, initial public offering. That's when Tesla decides to give the shares, sell the shares to the public. And why does a company do that? So this is my attempt to explain why a company does that, and really just tell you what you're buying when you do when you do dive into markets. So here's Elon Musk up here. See, I'm moving this, Elon Musk. He's the CEO and founder of Tesla, and he probably has the most control and say in the company. Why does he have the most control and say in the company? At one point in time, he was the biggest shareholder. When you have the most shares, you are the most powerful shareholder of the company. You have the most say. It entitles you to the most votes. So that's what shares help you do. They entitle you to votes. They entitle you to ownership. If you're an owner, that means you get entitled to profits. So maybe one day Tesla does a buyback or a dividend. Well, as an owner of that stock, those profits come to you. And that's why you buy stock in the first place. So why would Elon Musk ever sell stock? Well, first of all, when he did his IPO, he clearly needed something. So I wrote this down. He writes, "I need money to grow faster, get paid, and build for the future." And that's the point of initial public offerings and putting stocks on the marketplace in the first place. Someone like Elon Musk has a vision, and he needs $5 billion fast. Because if he gets that $5 billion, he believes that he can build something for the future that will be worth a lot more in the future. But getting $5 billion is not easy. So he needs to sell a piece of his company. He needs to sell a piece of his company to funds, people, traders, investors, and then he takes that cash and he goes out and builds for the future. So as you can see, here's Elon Musk. He says, "I need money to grow faster, get paid, and build for the future." He then goes to the public and he says, here's the public down here. He goes to the public, "I'll sell you some shares of my company for your cash." He's willing to give the public a piece of his company for cash so he can build for the future. And then, we can draw this arrow down here. Here's the public. It could be pension funds, investment funds, hedge funds, regular people like you and me. And we might say, "You have a deal, Elon Musk. Take my money. You have a deal." So you give Elon Musk your money. He gives you a piece of the company. You're now entitled to voting rights, potential profits, and you do that transaction. You have a deal. He now has your money. And then that money goes back to him. Let's make this arrow here. And now Elon Musk has cash and he can go out and build for the future. Remember, markets also do not always work out like Tesla does. Sometimes a stock or a company will completely crater or crash. And the people who actually, put confidence in them, these people, remember, they traded their dollars for pieces of the company. They lose everything. They lose their money. Their money goes to zero, because they now own shares that are worthless. So there is risk involved, and that's so important. A lot of people talk about markets as if it's this really easy game to just buy shares and you profit. Not the case. I know plenty of people who have lost money, myself included, just on trading my dollars for shares that ended up being worthless, or the company never executed, never built, never turned a profit, never showed any growth. So that's really important. There is a trade, just like those previous examples we talked about. Like when you buy a car, for example. Let's say the car is a lemon. You traded your money for that car. You were thinking that car would be worth, something valuable to you. Now it's not worth anything. That was a bad trade. You lost money. Same thing can happen in markets. There's not much difference from that. The same way you research a car, the same way you can buy a car lemon, or a lemon car, a total dud, one that falls apart. is the same way you can buy a stock that turns out to be a lemon. Total dud, falls apart, not worth anything. So that's the process of buying and selling shares. The next step is who owns the shares. What you'll find over time, so I'm moving this around because this is all about who owns the shares. What you'll find over time is people sell shares. They buy at one point, take a profit and sell. They lose money and sell. Maybe Elon Musk needs to continue to sell to raise money, or he wants to cash out himself. And you find over time that this pie represents all of the shares in Tesla outstanding. It gets split up amongst different people. Funds buy some, insiders or employees buy some, pension plans or sovereign governments buy some, retail investor and traders like you and I buy some, and then of course there's like the CEO who may own some as well, or founders, co-founders will own some. And you need to always keep that in mind, because you are not the only one who owns shares when you buy and sell a stock. Stocks are owned by a pie of people. This pie in this example represents 100% of all the shares. If you were to buy all of the shares in this pie, you would be the owner. So some people actually do attempt to do that. Hedge funds especially, private equity actually. They will actually go to Elon Musk and say, we want to buy your whole company, give us all your shares. And they'll try to buy all the shares from all of these shareholders to be the 100% owner, which entitles them to 100% of the profits. But in public markets, what you'll find, this chart for example, what you'll find is, to our point earlier, there are just so many people involved. It is a pie split up amongst all sorts of different people. This chart that I'm breezing through, which shows Tesla over all this time, there is a story here. There are thousands and millions of people who have traded. Billions of dollars have exchanged hands. And the pie today probably looks something like this, with different people at different points in time accumulating shares. So that is the makeup of a stock. Now we can talk a little bit more about the basics, what's really important. So you might see pages like this a lot around the web, and this just shows Tesla and some basics, shows its earnings per share. EPS means earnings per share. Every company is generating revenue or profit, or they're losing money, or maybe they're pre-revenue and they're trying to just sell their story. And as a shareholder, you need to make sure that what you're buying at some point is going to give you some form of profit or some sort of growth, or it's going to be, it's going to live up to the hype. And that's really important, because remember, when you buy a share in a company, you become a part owner. You own a small percentage of that company, and it entitles you to a small percentage of those profits. So here's Tesla, 73 cents per share. If you own some stock in Tesla, you're arguably entitled to some of these profits. Now, market cap, that tells you how much the company is worth. You can track this at any given point. Market cap tells you the total number of shares outstanding times the current price. One share is trading for $703 right now. So how many shares are outstanding? You go look that up, then you multiply the total number of shares out there. Remember this pie? There are millions of shares in this pie split up amongst all these people. Then you multiply this price. One share is going for $703 right now, times all of the shares available. And that tells you that the company is worth, at this point in time, $675 billion. Huge company, and you can do that though for any company to see how much it's really worth. Then you have some other facts like a PE ratio. How much are you paying for $1 in earnings? And you can use all of these types of financial metrics to make better decisions. Another component about this, and what we'll do is we'll go to Apple to dive in. Another component of this is just studying and understanding what you're buying. A lot of people forget about that. They buy stocks much like, say, a Louis Vuitton handbag. Sure, it looks good, it's fancy, it has prestige, but is the material and the quality actually that much different from something you could have bought from a department store? And you have to weigh these decisions sometimes, because at the end of the day, as a shareholder, you are owning a small percentage in a business, and that business, you're buying it because you want to see it grow or return profits to you, or to build for the future, or to continue to innovate, to get new customers. And that always has to be on the back of your mind. And there are so many things you can look into to make these decisions. I'm not going to go through all of them in this video, but here are some examples. You could look at the annual revenue of the company you're interested in. So you could say, wow, Apple does $274 billion every year in revenue. $274 billion every year in revenue. Huge number. And you could break that down. You could look at its growth rate over time. You could try to figure out how much of that revenue actually turns into profits. You could look into what they're doing with that money. So one example might be research and development. And you could say, okay, what are they spending on? And this just shows now they're spending about $5 billion in research and development every quarter, which might be kind of cool. They're a tech company. They should be investing in research and development, right? They need to be innovating. What are they working on next? Are they just going to rely on the iPhone forever? So these are questions you can ask yourself, and you can dive into all of this. There's no easy answer. Like we said earlier in the video, or like I said earlier in the video, there are countless buyers and sellers out there with different time frames and reasoning, and they have different viewpoints than you. You have to do the research. But remember, you're buying a piece of a company. So let's keep diving in, and just to show you some more tips for getting started. This next, what you see on the screen now is Tesla's investor relations page. This is the investor relations page for Tesla. It's where they share all of their information about their company. Companies report earnings every quarter, so 4 times a year. And earnings are designed for shareholders. So if you happen to be someone in this pie, if you bought a share of a stock, you need to pay attention to your company's earnings, because they are going to you and saying, here's what we did this quarter, here's our earnings report, here's what we're looking forward to the future, here's what we're working on. They tell you all of that on the investor relations page. And as we showed you earlier, you can chart plenty of that as well, or just research it by looking up their revenue, cost of goods sold, research and development. It's all right here and available to you. It's a matter of you doing the research. So on the investor relations page, we can look at their shareholder deck or their PR releases or production and delivery in this case. And this is the research it requires to make good decisions. There are some people out there who just buy and sell stocks for their first time. I was once that person. I just saw the name Tesla and said, oh my God, I can buy a share, and I just bought, let's say. I never did any research. But the key component to getting started is do the research necessary first. So here is Tesla Q4 2020 vehicle production and deliveries. And if you scroll down, you can start to read about what they did for the year. And also on their IR page, they have a shareholder deck. So how cool is this? This is a shareholder deck. This is for you as a shareholder. When you buy a stock in a company, you are now a shareholder. You get to follow these reports as a part owner, depending on how much you own. And this shareholder deck is for you. So this is Tesla's most recent shareholder deck. And you can study all of this. And here are some things you could ask yourself. The stock I bought, when I look through their shareholder deck, is it still performing well? Is its vision still intact? Do I think it will continue to grow? Are they communicating the message well enough? Do the numbers look real? That's really important, because there is a lot of fraud in the market. There are companies who will try to trick you as a shareholder, keep you invested, keep the party going. Executives pay themselves huge bonuses. You need to ask yourself that about any company all the time. Do you trust them, and do the numbers add up? So these are all things you should ask yourself as you are going through these decks. Does it look real? Is it something I want to continue to be a part of? Do the numbers add up? Is the story intact? And you can even take these numbers to your own calculation if you wanted to. You could start to run your own estimates. There are a lot of advanced investors out there who will look at these numbers, for example, automotive revenues in 2020, and then they will forecast out into the future. And they will say, okay, well, I don't think Tesla's going to make this much money in the future, and it's overvalued right now, so we'll bet against it. Or they might say, oh my God, Tesla doesn't even realize how much they're going to sell, or they're being really modest. This thing is way undervalued. It is going to soar in the future in 2021 and 2022 as people buy more of these cars. You have to do that math and research yourself and make that own decision. Because what's really important at the end of the day is there are no easy answers. When you have this many people involved in markets, when you have millions of shares being traded, when you have everyone trying to profit, and when you have everyone having different time frames and reasoning, you're just going to get a lot of hard questions and decisions that you have to make. And if you do your research, if you understand the basics, you just may have a chance. And before we end this video, there's a few questions I want to leave you with that you may find helpful. So by the way, we've gone through the basics of what a stock is, what the symbol means, what the price means. We spoke about all of this, why shares are even starting in the first place. We talked about the financials, being a part owner. You want to make sure you understand what you're buying, total revenue, cost of goods. Do you get the business? Does the business make sense to you? We talked about the basics of just following along, what's their earnings, upcoming earnings reports, market cap. We then dove into the investor relations aspect. As a shareholder, you can follow the company's updates. You're a shareholder now. You get to follow along, criticize them, applaud them, make sure they're hitting their targets, and most importantly, ask the tough questions. And the final thing that we want to end on now is the aspect of trading, because trading makes up a large component of the market. Now, you can download an app and buy and sell a stock because you believe in the business, you think it's undervalued. Just like you would research a home or a car, you're going to research that stock. And then there's the aspect of trading, and trading refers, in my opinion, to the actual buying and selling of a security. When you buy and sell, you're trading cash for stock or stock for cash. And to trade well, you want to have a plan. So you could just buy randomly, but that's not really smart, is it? So there's no plan there. So some of the things you can do instead is you can make out a plan. As an example, you could do monthly purchases, or this is called dollar cost averaging. Remember, I'm just running through the basics to show you some examples. So you could do monthly purchases. Once a month, I want to buy X. I don't care what the price is. You could do things like technical analysis. And technical analysis is the study of the chart and looking for perfect entries. One example might be this. I want to buy every single time there's a 10% correction. I believe this company is so undervalued that every time there's a 10% correction from its most recent high to its most recent price, I want to buy some shares. Another example might be you study volume or price, momentum, trend. And momentum just means, is the trend going up and how fast is it going up? Some people like to draw trend lines, so it might show them support and resistance. Maybe there was a trend line here that now got broken, so they sold, and now they're looking for a new level to enter on. And as an example, someone might draw a line like this, and they might say, okay, I like this line. Why do I like this line? Because the last time it was at this price, it was the high of this huge candle, and it went higher. So someone was clearly buying then. I also noticed that price kind of bounced here. I also noticed price bounced here. And so if price comes back to here, that's where I'm going to buy. So that is another aspect. You could do this technical trading. Another one is you could make life easier on yourself and just call a financial advisor. So this video is probably about doing it yourself, but calling a financial advisor is awesome. Go get some help. Have someone come and show you the way, build out a long-term plan. There is nothing wrong with that. And it just may save you a lot of headache. They'll do it for you, make sure it's trusted, verified. You could go to the SEC website. The government has a lot of helping governmental bodies that are meant to keep markets safe and people safe. Go check those. 100% check those. I'm going to add that in. Say check SEC. And there's also FINRA, which is the financial regulation, FINRA. So make sure you also check FINRA as well. Do not get scammed. Always do your research, even about a financial advisor. And then, of course, there is just the element of value buying. So value buying. And value buying would mean you say, well, I think Apple is worth $110 per share. That means if Apple ever goes below 110, here's 110, if it ever goes below, I'm buying. Or if it goes near it, I'm buying. Because to me, that's buying at a bargain. So there's also that aspect. The key here of these 4 things, though, is that you're building a plan. Build the plan, build the plan. That's so important. Now, one final thing I'm going to say as I wrap up this video is you can also paper trade. And paper trading allows you just to test out what the heck you're doing. Why put real money on the line? There is no reason to put real money on the line when you can trade in a simulated environment. So here's paper trading, for example. We can sell short, we can buy, market orders, limit orders, stop orders. Perhaps I can make videos on these later, but you can test this all out yourself. So I'm actually placing a paper trade order. I have no money on the line. This is more like a video game. It's simulated. I'm buying 50 shares of Apple. I can click buy, and I've just bought 50 shares of Apple. You can see the entry price. So you can use paper trading to just get started without risking anything. Everything that I've tried to explain in this video, you can take to paper trading. To me, paper trading is really important for that reason. Don't risk money. Go out and test it first. See what it's like. Does your strategy work? Does your thought process work? Is your research good enough? So paper trading can be really helpful like that. And we have these 50 shares. So we can now sell 50. And we lost $1 on that trade, it looks like. Let's see. Count history, we lost $1 on the trade. Yep. We bought 50, sold 50, lost $1. That was a bad strategy. But at least now we know what it's like. Buying and selling is not easy. There's no such thing as quick profits. In fact, we lost $1 in those 10 seconds or whatever it was. So I hope that this video helped. And really, though, the key is this. And I hope it's the one takeaway that you can walk away with after watching this. 1, do your research. Always do your research. Do not just blindly buy or sell. Do some research first. 2, as a shareholder, you are entitled to something, and you need to make sure you're following along and that you understand the bigger picture. How did you get here? Well, there was an IPO, there was an exchange for cash, they invested, people bought shares, held them for the long run or the short term. Over time, the pie changed. There's all sorts of different buyers and sellers now. The ownership structure looks way different. How do you fit into that? 3, how about just understand the financial situation? What's its market cap? Does it make any money? Do you still like the story? 4, are you following the company's updates? Do you actually care about it? Because if you're not following the company's updates, why do you own it? There's no reason to own it if you're not following the company's updates that they're providing to you. And 5, most importantly, is this. Do you trust the future vision of that company, and is it where you want to keep your money? So those 5 things can really help you get started. And this video in general was made for beginners. Now, I should say, markets are made up of thousands or millions of people. There are no easy answers, no get-rich-quick schemes. I may have delivered this video trying to act like I'm some sort of pro or something, like I know everything about markets. Guess what? I'm still only 10 years in. I still have a lot to learn. And anyone who tries to tell you that markets are easy or this is just some sort of, simple process to, well, it's just run, in my opinion. It takes hard work, a plan, and commitment to actually make this work for you. Because, as I may have said earlier, you are going up against a lot of people and everyone's trying to profit. There are funds with hundreds of employees all trying to, make more money than you are in markets. And when you have that in mind, you realize what you're going up against, and it might just slow you down and think a little deeper. And even this video I'm making, you should question. That's one of the key things with markets. Question, question, question. I did my best to share what I know about markets after all these years. I really hope that it helped you at least get started. That would, make this video worthwhile for me if it just helps you get started. So go ahead and leave a comment below, press like, whatever you have to do. I hope it helped. If I explained something wrong, that's totally fine as well. Just leave that in the comments. And thanks for watching.